I guarantee you this is the simplest and best explanation of the daily bias on YouTube. If you want to confirm this, stay with me until the end of this clip. One of the things traders find very difficult in price action or even in ICT is how to easily determine the daily bias. We won't go into definitions or anything like that, as the daily chart is clear. It's the direction the market is likely to take on the coming day or on this day. But I will give you the best and different method from the majority. We will start from the weekly frame and then we will move through the frames. Okay, first thing on the chart, we open the trading view platform. Then we set the chart to the weekly time frame. After that, we need to understand that each of these candles represents a week. What does that mean? It means each candle will have 5 days inside it. First, I will draw the lines that determine the highest and lowest of the weekly candle. Try to use colors to make the chart understandable and easy to read for you. Let me clarify with this simple example before we return to the chart. Look with me. We said that in the weekly candle, the color is white. Okay, this is the weekly candle. Alright, the previous week. This is a daily candle I drew like this. Why? This is usually a Monday candle. Okay, Monday candle. I'll wait and see where this candle closes. I see that it withdrew its liquidity on its own last week. What does this mean? This tells me that this week will be an excellent week for bullishness. And this is what happens. I wait for Monday's candle to close. Then Tuesday's candle comes and we find that it also drew liquidity from Monday's candle. Therefore, this week will be bullish because a single candle, a single day candle, drew liquidity for an entire week. This means that this week will see a strong uptrend. I hope this example is clear. Now, let's get back to the chart. Look with me, now that I've drawn the weekly candlesticks lows like this. Look at the next day, just as we explained in the example a moment ago. And always notice on Monday, in this case, we return to the daily time frame like this. Then I look at the Monday of the following week. The Monday that concerns us is this one exactly. Here's the Monday candle. Look with me here. This is a live example that confirms to me that we will see a rise in the following days. We use the white color to mark the high and low of the weekly candle. And look closely with me. Monday closed with its candle body above the high of the entire past week. What does this mean? It's the strongest evidence that the following days will be strongly bullish. This is the first thing I wanted to teach you. Second thing, always in the weekly time frame, assuming it's over. This week, we're in this week now. This is the red candle you see with us. This week I expected it to be bearish and we would see gold drop to such prices as it is today. How? This green candle is the weekly candle following this candle. Okay, let's see how this candle closed. Let's draw this week's high and low. As we mentioned, we used white to make the chart easy to read. What will you notice? Look with me here. This candle is this week's candle. The way it pulled liquidity means it pulled what? It pulled the high of this candle and also pulled the high of this candle. This means there will be a strong drop and it closed with the candle body inside this area. Alright? It didn't close with the candle body above or below this previous candle. I think the idea is clear. This is on the weekly time frame. The third thing I want to teach you is that you need to be smart in analysis and notice what? The fair value gaps. By the way, this previous segment about the fair value gaps, I also recommend you watch this segment. It's in the same playlist as this segment because, as we said, when the low of the candle is pulled, what does this mean? We expect that the candle following the candle that pulled the low of the previous candle will be bearish. In this case, the low of this candle was not pulled as expected, but instead it rose. Why? Because there were fair value gaps here, and most people didn't notice these fair value gaps. Alright, now we will switch to the daily time frame. We will also see a smaller view of the market and we will always start with you from the Monday candle. Alright, regarding the Monday candle, the first thing, I move the candle back, the Friday candle, which is this candle I have. I draw the high and low of this candle and see which liquidity Monday will pull. Consequently, it pulled the liquidity at the top and closed with the candle body above the high of the previous candle. This means the market continues to rise. And this is what happened. On Tuesday, this gives me an insight that most of my trades should be buying. That is, when I switch back to a smaller time frame, like an hour or 30-minute time frame, to get trades, I try to focus on long trades. The same goes for Monday's candlestick. We draw its high and low and we see that Tuesday was also the same day. Monday's high was drawn and the candle body closed above Monday's high, which is this candle. What does this mean? It means we'll have an uptrend. Now, we draw the high and low of Tuesday's candle. We also notice that Wednesday's candle drew the liquidity from Tuesday's high and closed with the candle body above Tuesday's high. What does this mean? It means our market expectation continues to be upward. Now we draw the high and low of Wednesday's candle like this. So our expectation is that it will be bullish, right? But this didn't happen at all. Liquidity was withdrawn and the market fell. Why? Let me go back with you to the weekly time frame and explain why. This is the fourth thing I want you to learn. Take a look with me in the weekly or daily time frame. Learn to draw the highs and lows of at least 4 to 5 candles before the week you're in. Why? Because sometimes, like what happened here, the market didn't take any liquidity this week at all. We're working this week and into this week. This week, an inside candle formed, while the previous week, its liquidity was never drawn from the bottom or the top. And the week we're working on, this week, we reached the high of this weekly candle on Thursday. It means we took the liquidity of an entire week. So we definitely expect that the market won't continue to rise like what happened. Now we go back to the daily time frame. This is the week where no liquidity was taken at all. We came on Thursday expecting the market to rise, but we didn't focus on the fact that there was a week where no liquidity was taken at all. And on Thursday, if this liquidity is withdrawn, this week's liquidity is withdrawn and the market falls. So as I said, you must analyze the chart intelligently. Sometimes we can't predict daily bias. Let me tell you why. On this particular day, there was strong news, and among that news was the NFP. Here, it's clear that millions of traders' stops have been hit. Market makers exploit this to make more profit. I think the point is clear now. I think you've figured out how to define your daily bias. And why do we need a daily bias? If you enjoyed the video and found it helpful, don't forget to like it. Also, don't forget to leave a comment and share your thoughts on the video. And if you'd like to continue this series and what strategies you'd like us to explore further.